The Fed rate cut market just printed one of its sharpest single-day drops this cycle. In 24 hours, the probability of a cut at the next FOMC meeting fell 14 full percentage points, from 56 down to 42%. Almost $2 million in volume traded through in one day. Something just fundamentally changed the calculus. 3 headlines hit in quick succession, and each one landed like a brick. First, CPI came in hot. Inflation printed at 3.4% against a 3.1% consensus. That alone is enough to make any rate cut forecast look shaky. Second, Powell's remarks at a Jackson Hole preview event struck a hawkish tone. The market read it as a clear signal he is not in a rush to ease. And third, 2 actual voting FOMC members publicly pushed back on near-term cuts. When you get all 3 of those in the same news cycle, the probability does not drift lower, it falls off a cliff. Let's talk about what this move actually tells us. A 14-point drop in a market with 3.15 million in deployed liquidity is not noise. That is conviction. Traders are not just repositioning. They are repricing the entire near-term Fed path. At 42%, this market is now saying a cut is the minority outcome. Below 50 means the base case has flipped. And the volume, 1.82 million in 24 hours, tells you this was not one account pushing the price around. Real, distributed sell pressure drove this move. Now let's layer in the smart money signal. The flow data is showing a clear sell signal on this contract. That means the accounts historically associated with accurate forecasts, the ones that tend to get it right before the broader market catches up, are positioned against a cut. They moved first, and the price followed. When smart money aligns with a macro catalyst like a hot inflation print, it is not a coincidence. It is confirmation. The sophisticated accounts either anticipated the data or reacted far faster than the crowd. We have seen this exact setup before. When CPI surprised to the upside in a similar fashion in 2023, rate cut probability markets dropped between 12 and 18 points and mostly held those losses. They did not reverse until the next clean data print arrived to recalibrate sentiment. This contract is sitting in that same zone right now. On correlated markets, Fed pivot timelines, near-term Treasury rate forecasts, you are seeing the same directional pressure. This is a broad macro repricing, not noise on a single contract. So what flips this market back? Watch for the next CPI release, any Fed speaker comments before the FOMC decision window, and the jobs report. Any of those printing softer than expected could push this probability back above 50. If you want real-time alerts the moment probability markets move like this, hit subscribe and follow Bet the News on Telegram. The next catalyst window is closer than you think.